What's tax credit? I'll give you an example. The deal is if you pay, let's say, $5 million for the building and rehab and create 30 rooms, hotels here. So let's say rehab, so purchase, rehab another $5 million. When you're done, you spend how much? $10 million. But its value gonna be at least $14 million. Why? Brand new luxury 30 rooms in Old San Juan. There is no competition, there's no place. Why do you think they're offering 40% tax credit? Meaning the government says, we're gonna come and audit you. We're gonna see that you purchased it for $5 million. We're gonna see that you spend and have receipts, architect, drawings, plumbing, electricity, etc. for $5 million. $10 million, we're gonna give you a certificate of tax credit. What's 40% of $10 million? $4 million is gonna be credit. You can sell that certificate, it's tax credit. That means credit against your tax. You can sell it to the banks at 90 cents on the dollar. What's 90 cents on 4 million? 3,600,000. Okay, so at a discount, I'll sell at 3.6. Let's just make it 3.5. Let's say I give them a better discount. So I sell it to a bank and they pay me $3.5 million, non-taxable. This is a tax credit. I just tell the bank I have tax credit because I did this development, this tourism office, government tax credit. This is US, this is part of the United States. The bank, they can use it to reduce their taxes, so they pay me $3.5 million. So what's my cost? From 10 million minus 3 point, thank you, sir. My real cost now, 6.5 million. On a building that's valued at how much? 14 million. Now that it's up and running as a hotel, I can go to the bank and say, I'd like a new loan. And the loan, minimum, would be $8 million. Are you with me? So if I get a loan for $8 million from the bank, I can cash out $1.5 million. This is a loan. Is this taxable? No, just cash out $1.5 million and I have a performing hotel. When you put money, get the money all back out and you have income. That return is, what is it, cash on cash? What kind of return? 5% cash on cash, 10% cash on cash? It's an infinite rate of return. I have no money in the deal. All the money came out. So it covers that $1.5 million. Remember, there'll be some interest I had to pay. There'll be holding costs. There'll be some delays and all this. So I'm going to cash out like $1 million. Say I'm going to cash out just $500,000. Say I'm wrong, I'm going to cash out nothing. I got all my money out and I have income coming from the building. I know the building will make about 140 to 150,000. We're not about 95,000 a month. I know, and you can do the calculation. I'll show you tomorrow what calculators to go to, etc. $8 million at 7%. On 20 years, not even, on 25 years, not even 30, because the bank said, no, we only do 25 on this type of bill. My payment will be 55,000. If I'm netting 95 and I'm paying 55, 65, 75, 85, 90, that's 40,000 a month. How many people can live on 40,000 a month? Thank you very much. Let me just give you a cream puff, cream, like chantilly cream, you know, in French, like for patisserie, okay? Like top added bonus is when it's a tourism thing, you, on 100% of the income, 90% is exempt. You only pay tax on 10%. That means on every million, you're gonna pay tax on 100,000. It's crazy. That means the tax is what? 15%? You give them $15,000 on $1 million in income. Is that beautiful? You understand what type of deals I do? You could, but I don't like opportunity zones because I think one of my biggest leverages in my real estate fund is when I tell people, you can cash out with 12 months notice. I cash you out in 6 months. People hate to get stuck. Even though there is tax benefits and all this. You see, I sat down. You see, a lot of people study success stories, but I like to study failure stories. Where did the problems come into the SEC? Who complained to the SEC about real estate fund managers like me? It's in here. I studied that very carefully. I found out when they raise money from non-accredited people, they don't have enough money, and then people want the money out. They don't have a lot of net worth. So what do, these people? They call a lawyer or they call the SEC. Creates a problem for you. I said, I don't want that. I want to get more accredited. Some non-accredited, but I know them well. and they understand really clearly what's going to happen. Then I said, if they want the money out, I'm going to create 2 ways for them to get out. Well, 3 ways. Number 1, I'm going to make it 12 months only. Within the 12 months, I can cash them out. Is that good? Then they don't want to cash out because they, oh, I can cash out. No, let's leave it in. Number 2, I can buy shares and cash them out. So I can invest in my own fund and cash them out. Number 3, I can raise money from somebody else to cash somebody else. Approved by the SEC. You see how I did it?